It's about that time of day again. My name is Joseph. It's Tuesday evening, January 17th, 2017. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bearish and trying to finish off the measured move tonight, but the candlesticks are telling us that sellers may not be interested in selling this low, so we're waiting for a retracement. The E-mini S&P is sideways and trading inside of a range tonight, so our plan is to sell high, buy low, and we'll use that two-try rule tomorrow until we get a successful breakout. Gold, the yellow metal, is bullish and trying to retest today's high, but a recent triangle on the chart tells us the most reliable opportunities will likely be after a trap below the low of that range. The euro, the 6E, is bullish, just inches away from retesting the high. I don't want to buy the high, so the plan is to look for a successful breakout pullback or wait for some traps back below those lows. And of course, the FDAX also bullish and trading with a spike in triangle, spike in range this evening, which tells us to look for traps to the lows or a strong breakout pullback through the highs. Got another great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow's Wednesday session. But before we jump into this nightly newsletter, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. It's only a small portion on the YouTube channel. Follow the link in the description of the video and come over here and join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this video is ready to be watched. Follow me on Twitter. I'm posting my charts throughout the day. Find me on social media below the video tonight. And of course, also don't forget to download those charts in tonight's video. Follow that link below the video on the blog, and you can download today's charts, have them ready on your computer for tomorrow. In the upper right-hand corner, don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Stop wasting your time elsewhere and grab that free pass. If you're not a member here at School of Trade, come out and join me as a guest in the trade room. And of course, if you're brand new here to the SOT community, there's a reason why we're known as being the industry leader in this stuff, right? Grab those frequently asked questions, learn the who, what, where, when, and why, right? And I'm always here standing by to help you guys out along the way if you have any questions. Let's keep going. We got a busy week ahead of us here. It's a holiday shortened week. This is the third week of the month of January, right? Third full week, that is. Of course, we're coming out of a holiday shortened, right? Holiday weekend, right? Hope you guys had a great MLK day off on Monday, right? Today is in the books. No major news coming out tonight, so nothing to worry about, right? Nothing to worry about in the overnight Asian session. Going tomorrow, though, into Wednesday, January the 18th, keep in mind what is typically on Wednesday mornings, right, is the inventory report. That's been pushed back 24 hours, a little bit more than 24 hours, right, to Thursday at 11 a.m. So thanks to the holiday on Monday, right, what typically happens on Wednesday has been pushed back till Thursday's session. So that's going to give us a full session to work with tomorrow as we dig into the news here. We've got some early morning news in the London session from at 4:30 and 5 a.m. tomorrow, right? That's pretty much all I got to worry about tomorrow morning. I'm not expecting it to be too big of a market mover. I think what you'll probably see moving the markets the most is going to be some of that backlash, right, from the old Brexit announcement, right, that we heard, right, in the overnight session from Monday night into today's session. So I think you'll probably see most of the markets in Europe reacting to the Prime Minister's Brexit speech, right, which, of course, everybody was a little bit up in arms about today. I'll let you guys do your homework on that if you care about that stuff. I wouldn't worry about it. I would just trade the chart, right? I don't really care about what the news said. All I care about is how the news is reaction, right, or how the reaction to the news is, how the market is reacting to it. So I wouldn't dig in too much into the news we saw earlier on today, but just be aware, though, right, tomorrow will probably be a little bit more of that reactionary environment that we saw early in today's session. As we go into tomorrow's U.S. session, of course, we'll be in the trade room tomorrow morning at 8 a.m. Eastern Time. I hope to be able to trade with you tomorrow. Come join me tomorrow at 8 o'clock Eastern Time as an advanced member. We'll do it all together. We got the consumer prices here at 8:30. We got the industrial production at 9:15. I'm not too concerned about the Bank of Canada announcement. I'm more concerned that it's 10 o'clock. 10 o'clock tends to be a real volatile time of the morning here. So I'm not so concerned about the news at 10 o'clock for the Bank of Canada, the housing market index, so-so stuff there. I'm more concerned, though, tomorrow morning at 10 a.m., just, of course, it being a volatile time of the day. So 8:30, 9:15, expecting some volatility there at 10 a.m. That does it for the tomorrow's morning session. We got the beige book. That's a yawner at 2 o'clock. We got Yellen. She's almost right. She's almost finished up here at 3 o'clock. I'm not going to worry too much about this stuff tomorrow, though. Beige book, Yellen. You might see some. You might see some stuff on gold, right? Some gold reaction to that tomorrow afternoon. But if you're trading crude oil, if you're trading crude, E-mini, S&P, gold, euro, as you get later in the day, most of these markets, with the exception of crude and the S&P, most of these are going to be, relatively low volume at that time. So really the most important news here tomorrow is going to be starting off there at 8:30, 9:15, 10 a.m., right? That's going to be the meat and potatoes in tomorrow morning's session. Be aware of that. And again, I'm not expecting to see too big of a market reaction to it. It'll be lower volume, right, as the day finishes up at 2 o'clock and 3 o'clock tomorrow. So get those trades early tomorrow when you got some early morning news. Get those trades early and then be prepared for things to slow down ahead of that 2 p.m. beige book, right? And, of course, Janet Yellen at 3 p.m. Guys, we go over all of the news strategies in our beginner course here at School of Trade, right? If you don't know how to handle economic news, make sure you get some education on that, right? And don't forget, we'll do it all together tomorrow. So we got no major news tonight. We get some big news tomorrow morning in the U.S. session and some little tiny news events, right, tomorrow afternoon. I'm not going to worry too much about those, right? And again, tomorrow's inventory report has been postponed, right, pushed back 24 hours till Thursday at 11 a.m. Just a heads up on this, we do have rollover. We are watching rollover right now on crude oil futures. Right around the 18th of the month, we get that rollover. As you can see for today, we are still well in the 217 contract. Basically, the way rollover works, I don't care about expiration. All I care about is when the volume on the next front month exceeds the daily volume on the current front month. So right now we're trading the 217 contract. The 317 contract will be up next around the 18th of the month, right? Sometimes the 17th, sometimes it's the 19th. We don't really know when that will be. Tomorrow's the 18th. So obviously tomorrow we'll start looking at volume rollover, the 317. At this point, it doesn't look like that's going to be the case. We're probably going to get the rollover on Thursday, just in time for some inventories as well. So if anything, tomorrow may be a little bit lower volume as these two contracts share volume. This is kind of a unique thing about crude oil. One of the benefits of crude oil is that it's not susceptible to news. It's got great volatile ranges, plenty of liquidity, plenty of rookie traders that love to make lots of easy mistakes to pick up on to take advantage of. The one thing that is the one thing you do want to be aware of though when it comes to crude is there's that weekly inventory report, right? Which that is the news you want to watch out for if trading crude, and the monthly rollover, right? It's a little bit different than other markets that are like the S&P, which is of course a quarterly rollover. With crude oil, what happens is sometimes if we don't get that sharp rollover from one day to the next, you'll see them kind of share volume here. So tomorrow we may see kind of relatively speaking low volume just because again, right, they're kind of balancing themselves out. As of tomorrow, you could probably trade either one really. I'll be on the 217 contract until the 317 contract has more volume. All right, got that out of the way here. Rollover once a month around the 18th. Again, we cover all the economic news, the trading calendar, contract rollover, setting all this stuff up correctly in our beginner course, right? Make sure you get a good foundation to stand on for your trading career. That beginner course will definitely give it to you. Let's jump right in. Crude is bearish and trying to finish off the measured move this evening, but the candlesticks are telling us that sellers may not be interested in selling this low. So the plan is to wait for a pullback to resistance so we can sell high tomorrow. If we don't get the pullback, then we need to be aware selling into the low of this channel. So the plan will be to look for traps above prior swings, which is where we know the largest orders will be waiting to sell it back down again. As you can see here, boy, the day started off with the bulls well in control, right? Had some great opportunities here to buy on those pullbacks on the way up, but of course they couldn't hold it, right? They got a new higher high, they couldn't hold it. We saw the bottom fall out of it. The sellers took control, and of course, at that point, this became a bear market. The buyers had a chance. The buyers had a chance here to hold their own pullback and go back to retest retest the high. But of course, as you can see though, any price that rose up, right, was seen as a selling opportunity and slammed right back down again. The bears have clear control. I'm going to take this high. Usually when a market goes from bullish to bearish, usually you'll get a good channel drawing off the low and then copy and paste up to the high. There's a few different ways you could have drawn that channel. We definitely have a bear channel here right now. And with a bear channel, I know we're looking for channel rotation. So from high to the low to the high back down to the low. Right now, channel rotation tells me we are gunning for the low of that channel. Now the low of that channel, right, puts us right into the double down. It puts us in the prior day low. We get a measured move down here as well, right? So we know where these sellers are trying to go, right? They're trying to finish off this move off that high to rotate back down to those lows. Also, looking at the chart a little bit closer, we're seeing quite a bit of wicks here, but really this is the big concern here, right? You're seeing the day kind of tail off here, right, into some a lot of wicks on these candlesticks. That's what I mean when I say it's a bear market, but it looks like these sellers might not quite be interested in selling this low. So whenever we see proof in the candlesticks, right, we don't try to predict, we look for proof. Whenever we see proof in the form of these big doji candles, big wicks, small bodies, that basically tells me here that we're running out of sellers to keep fueling this move to the downside. Cue the resistance trend line. Now we, of course, draw that trend line up, and now that trend line becomes a great spot here for us, right, to look for some overhead resistance. So if the sellers are giving us some evidence right now that they may not be too confident selling low, we start looking for ways to sell high. Now, obviously, the top of that channel, right, that's going to be an area of resistance. That's a spot we'll be looking for a sell, right? I love the fact that this prior area of support can now be used as resistance, right, now that we are below it, right? So now, of course, breakout pullback using that trend line as resistance. You know, really in my book, anything around this area here is going to be a great spot, whether it be the top of that channel, whether it be that trend line, whether it be all the way up in the battle zone, right, to bring that price down. If you look at it a little bit differently, if you put on kind of an undershoot here, if you've been a student of mine for a while, right, if we're talking undershoot here, then, you know, we may see a definite overshoot that may put us up around that battle zone, right? So, you know, if we don't finish the rotation, undershoot into overshoot. So it's a little bit tough to tell where we'll go right now. But again, looking at these candlesticks, I'm anticipating a move up, and then of course, you know, be thinking about selling opportunities going back above the moving average, right? Buyer failure and back down, right? Buyer failure and back down. Or possibly here, if the buyers are able to hold a pullback, right? Buyers take short-term control and then break and hold the move, right? Going back down from there, right? So whether we fail right away and run back down, or if we get up into the battle zone and then bring it back down, right? Again, you know, you really could extend that battle zone out really to this whole area, you know, kind of right there, right? That could really be the whole area right there, right? Up and then back down again. Now, that battle zone is also a really important piece of information, because if we do happen to, for whatever reason, just run, hold, and go, right? This is going to be pretty much the line in the sand here where you can start looking for buying opportunities here again, right? So imagine now the moving average comes over, right? If you can hold that pullback above that battle zone, that'll be a spot for the buyers now to start looking for the opportunity. The hard part's going to be, though, you can assume anything that goes up here is going to be looked at as a selling opportunity back down. It won't be until we break through it, right, that we can actually sink our teeth into a bull market that is reliable. Now, what if price goes lower, right? I mean, we're trying to go lower here. So what if prices collapses here? You know, for all I know, we may see a little trap high here and then right back down. If we do continue this move lower here, now we're thinking, okay, we haven't been given the chance to sell off the high, right? If you sold this, and I gave all of our students in the trade room today some instructions on this afternoon, so hopefully you're with me on this. But the reality, though, is we're trying to retest that low. Well, if we do run lower here, now you want to be thinking about traps, right? So trap high, sell back down. The goal, right? The goal is to sell high, don't sell low. So if this price really just falls out of bed here, right, runs down, right, runs down into this no trade zone down here, we want to be bear, right? We want to be selling. We just don't want to sell that low. Looking for traps and back down, right? Looking for traps and back down, or looking for failures and back down. The key is if it does run lower.